The broadcast is now starting. All attendees are in listen-only mode.
Okay, all right. Hello there, everyone. Hey, this is Neil Green, just like every Wednesday with you on the weekly webinar. Just want to do a technical check, see that you can hear my voice and see the screen before we start. And then we're going to go right ahead with your favorite webinar, by the way, because a lot of people ask me all the time, do the technical trading again and again, and I'm doing it like once a month, and I'm really glad to do it because technical trading is something that you can use on the everyday base. Of course, you can combine it with fundamental trading, just like we do every week. But guys, you can use the technical trading on the everyday, even if the market is boring and we don't have any great events. Of course, if we have great events, we use the support and resistance levels, and we're going to talk about it today. But on the everyday, we can use technical trading, just for trading, even if we don't have any big fundamental events, and trade on these technical indicators and so on in our everyday. So you guys on GoToWebinar, I would like to welcome you. Okay, just write me down. You have a chat window, so if you have any questions during the webinar, you're more than welcome to write me down. I'll do my best to answer all of your questions during the webinar. Of course, that at the end of the webinar, we're gonna leave some time for a Q&A session. So questions and answers. I don't want you, to leave this webinar with anything that you didn't understand, we didn't clarify. It's very important for me to give you the information correctly and that you will understand it. So everybody, you can hear my voice, see the screen. You're supposed to see our homepage at itrader.com. By the way, you guys on Facebook joining us, welcome. And just for you to know that next time, if you want to join our webinar, you don't have to go on Facebook. It's pretty easy. All you have to do, you go to our homepage at itrader.com. Just scroll down here and look for join our webinar. Okay, click on save me a seat. All you have to do is put in your first name, last name, and email address so we can contact you back. And that's it. All right, so you guys on GoToWebinar, you can hear my voice? We good? Yes, all right. Any questions, just write it down on the chat window. I'll do my best to answer in between. And of course, at the end, if you have any further questions, you're more than welcome to ask me. Okay, so we said today we're going to talk about technical trading. Let's start from the beginning. It's a good idea, I think. Okay, technical trading. Technical trading, by the way, just for you to know, is the bread and butter of trading. Okay, I said it before on the okay, can you hear me now? Yes, I'm sorry. It was a technical problem. Okay, so we said technical traders cover their favorite assets each day, all right? Which means, I guess most of you, some of you prefer to work with currencies or stocks or indices, commodities, whatever you like to trade on, okay? The most important thing is, I guess each one of you have some, as I said, assets that you prefer more. That you look at on the everyday. I think that after the webinar, this webinar will be much easier for you to take a different look at these assets, okay, and try to understand the points where it's high, okay, if the price is high, too low, and how do we take advantage of it. So as we said, technical traders cover their favorite assets each day. Technical trading provides consistent opportunities each day, all right, which means we don't have, of course we can combine, as we said, in order to be, we said it on past webinars, I'll say it again. In order to become professional traders, we need to know how to combine the fundamental analysis, and I'm doing it every week with you, every Wednesday, sometimes, even in other days, just breaking in and talking about the fundamental events. But as a professional trader, we need to know how to combine this fundamental analysis with the technical analysis that I will teach you right now. So even if we don't have any big fundamental events, we can always use the technical analysis, okay? Even if the market looks boring and the volume of trading is very low, we can always use the technical analysis in order to understand statistically where the market is going. And I'll show you right now. So the technical trading provides consistent opportunities every day, each day, as we said. Technical traders watch and trade on price movement while monitoring fundamental changes, all right? Technical analysis works on support and resistance levels, okay? Now, what is support and resistance levels? Okay, just for example, let's open the MetaTrader. Okay, you guys, let's open the platform. There you go. This is the MetaTrader. And look for, let's take currencies. Let's start with the first one, euro versus the dollar. This is a monthly chart. Let's go to a daily chart. This is a candlestick daily chart. You know what? Let's even go, let's go to 15 minutes and zoom out a little bit, okay, just to show you. As you can see, this is a 15-minute chart of the euro versus the dollar, okay, which means that each candle that you see here, if you know how to read a candlestick chart, represents 15 minutes. A green candle means that the price of the euro, okay, is rising versus the dollar. And when we see a red candle, it means that in this specific 15 minutes, the dollar, the US dollar, got stronger versus the euro, okay, which means the opposite. The euro here is the major currency and the US dollar is the secondary currency, and the chart that you see reflects the relations between these two currencies. And of course you can trade on any other currency, it works in pairs, okay. As you can see, a pound versus the dollar, dollar versus Japanese yen, dollar versus Canadian dollar, and so on and so on. They can keep going for, and it's traded 24/5 except for Saturday and Sunday, so you can always use the technical trading. Now, when we trade technical, okay, we want to look for some key levels, which means the low and the high prices of the same assets. Okay, right now 1 euro equal to $1, 70 cents, around $1.17. All right. If we just take a line and put it here, as you can see, you see the price went down in the 15-minute chart and stopped here, went up again, stopped at these areas, and then went down and went up again. So I can say that around, it's not, you know, science, but around this, at around 1.1680, we have a support line. You see where I drew the line, this red line? As you can see, the price of the euro versus the dollar, this asset touched it once and then did it again, okay? Supposedly it might do it again and again and again, which means then the support line will become stronger. On the other hand, if I take another line and put it here, around here, we had a small breakthrough and then it went down because of an event here. But this is a resistance line. A resistance line represents the prices where the investors believe in this case that the euro is too strong versus the US dollar. And then on these prices around 117.50 or 117.40 something, 117.50, the big money, the traders, we're talking about, listen, currencies are traded, Forex is traded at around $5 trillion a day. So you can see that every time 1, 2, 3, 4 times that the price touched around 117.50, okay, price went back down, and this is why this red line that I just drew here represents a resistance line. Okay, let's take the pound versus the dollar, drag it here, and look at another example. Look at this, pound versus the dollar. Again, same chart, it's a 15-minute chart. This time it's the Great Britain pound, versus the US dollar. Let's take the same line, and then I think right now it's going to be much clearer for you that this is a support line. Price touched once, twice, 3 times, 4 times, 4, and now 5, and now it might be the 6th time. And here we have a resistance line. We had a false breakthrough. You can see there was an event today. This is the fundamental event that took place today in the morning of the average hourly earnings plus bonuses in England, in the UK. I'm sorry. You can see that the pound got stronger for 15 minutes, right? This is a 15-minute candle, and then it broke the resistance line, but then the technical trading won and it went back down. Okay, So a lot of traders could say that we had two opportunities. One of them was the fundamental event itself. So we had around 15 minutes to trade here, and then we had a few hours since the event this morning, okay, to trade the other way. So as you can see, we have a very strong resistance and support line, and you can do it on any currency, on any assets, okay? If you trade on stocks, okay, if you trade on indices, if you trade on commodities, it doesn't matter what your favorite assets are, and you can always use the support and resistance lines in order to understand what are the prices that the traders believe that the big money believe that the price is too high, and this is at the time to buy the asset, and the resistance levels where the traders believe that the price of the asset is too high. All right, and now it's time to sell the asset. Okay, right now you can see that the price is very close to the support line. Good, easy questions? We're good, right? All right, let's go on with the PowerPoint. So all right, click here and go on. So technical analysis works on support and resistance levels. Just show you how it works on the MetaTrader. These levels are confirmed by technical indicators such as MACD, RSI. I would add, you know what? Let me teach you three of them. We have some technical indicators, okay, that they help us. They don't come instead of the support and the resistance lines. The support and resistance levels that you see, this is the most important thing. But let me tell you this. The technical indicators, as I said, they don't come instead, but they come to confirm what we already see on the support and resistance lines, okay? Okay, these are statistical, I would say statistical indicators that giving us buy and sell signals, okay, based on statistics. For example, let me show you three of them. If we go here, you know what, let's put it aside just a second. Now it's gonna be easier. Okay. Okay. If we look at, for example, let's take again the euro versus the dollar on the 15 minutes chart, all right? Up here, you see you have indicators list. You see on the F for function and plus. If I click on that and I go to trend, there are hundreds, okay, hundreds of indicators, if not thousands, but they're all based on the same thing. They're all based on statistic formulas. Now, I'm not going to go into the formulas. I'm just going to show you how it practically work on the chart itself. Okay, so if you go to trend and you click on Bollinger Bands, okay, let's do okay, you're going to get three lines on the chart. You see one. Okay, ignore right now the support and resistance. We're going to go back to that. The support and the resistance, these are the red lines that I drew like 2 minutes ago. Now, what you see right now is three green lines. You see one line, two, and three. Can you see that? Okay, these are the Bollinger Bands. Now, the middle line that you see, this line, you see, that is moving, this green line in the middle, this line represents the moving average of the prices. Now, always remember, the price statistically always want to go back to the average. If it goes too high, statistically, it usually goes back down to the average. And if the price of the asset goes too low, okay, this is usually the time where the buyers are going to come and they're going to push the price back up towards the moving average of the prices. Okay, so this is the lower band and this is the upper band. So we have the upper band, the moving average in the middle exactly, and the lower band. Okay, as you can see, every time that the price touches or goes over the upper band, this is a selling signal, which means that the price is too high. It went over the upper band, okay, and now the price want to go back to the moving average. Look at this. Here is a live example. This is from tonight, okay, the middle of the night. As you can see, the euro got stronger, touched, you see that it touched the resistance line that we put here, touched the resistance line, went over, just a little bit over the upper band, okay, and this was a great time to sell euros, and then the price went back down. Here is another example. Here is another example. As you can see here, okay, the price again went too high, touched the resistance line, went over the upper band, and went down again. Now the price here went under, you see, under the lower band, buying signal. over the upper band, selling signal. Under the lower band, buying. Okay? And so on and so on. Here is a great example for the price in this 15-minute chart of the euro versus the dollar that went under the lower band, touched the support line. So it doesn't come instead, but it comes to confirm. Because the support and resistance levels, this is the main thing. Now, on top of it, we can put these indicators, technical indicators, such as the Bollinger Bands that I just showed you, in order, to confirm the trades. Okay, so if you want to be sure that you want to buy or sell the asset, you can use these technical indicators. By the way, on the everyday, even if we don't have any fundamental or big events, market is boring, you can always take these opportunities, trading opportunities. Good. Let's see the RSI. RSI stands for Relative Straight Index. Okay. Opens another window. As you can see, it goes from 0 to 100%. All right. And then you see this line here on 30% and 70. You see 30 and 70, and you have two lines. Okay. Now the RSI says this. Every time, did you see that the Relative Straight Index, the straight of the sellers, okay, which means the price goes under, on or under 30, this is a buying signal. It means that the price is too low. Okay, just like here, you see the price went under the lower band of the Bollinger Band, under 30 on RSI. This is the 30 line. Went under, it was a great time to buy. And of course, the price went back up statistically. All right. 70 line is exactly the opposite. If you see on the RSI, on this indicator, the price touches the 70 line or goes over the 70 line, this is a selling signal, which means that the straight of the buyers is done, and now the sellers are going to come and push the price back down. So this whole market is based on buyers and sellers, the straight of the buyers and the strength of the sellers. Okay? When one is over, the other are coming, and the price always want to go back to the average. So on the everyday, we always have trading opportunities. Let me teach you a third one. Okay, I don't want to get you confused. Just a third one called Stochastic. Pretty easy, similar to the RSI. Here you have 0 to 100, and instead of 30 to 70, we have 20 to 80. All right, 20 to 80. As you can see, you have two lines. We have this green or whatever blue. This is a green line, represents the buyers. And you have the red line that represents, guess, you guessed it right, it represents the sellers. Now, every time these lines, okay, cross each other on or over 80, it means that this asset is overbought, and this is the time to sell it. This is a selling signal, because you see it's crossed on 80 or over. It means that the buyers are done, and now the sellers are coming. They're crossing the buyers, and they sell, and then the price goes back down. Every time the buyers and the sellers, these two lines, the green line and the red line, cross each other on or under 20, it means that the strength of the sellers is over, and this is a buying signal. It's time to buy the asset, in this case the euro. Here is an example. On the support line, under the lower band of the Bollinger Bands, under 30, and they cross each other on 20. 1, 2, 3, and major one, 4, the support line. This is the time to buy, and the price went up all the way to the resistance line. Technical trading, huh? Nice. Okay. So, just want to show you some indicators, and let's go on. Any questions so far? Okay. So support is an indicator for demand, okay, which means if the price touches the support, okay, it means that this is an indicator, indicates demand, which means the price is very low. We're going to see a lot of demand, a lot of buyers, and then the price is supposed to go back up. And of course, resistance is for supply, which means when it touches the resistance line, it means that we expect the price to go back down. Now, once a level is triggered, okay, either if it's the support or the resistance, when the price touches one of them, the price can either break the level or reverse. What I showed you so far is the reverse. Every time we said the price touched the support line, you went back up, right? And we said resistance for supply, which means every time the price touches the resistance line, it went back down. Now, we have two kind of traders. We have the traders that trade in between these support and resistance lines. They put their sell positions on the resistance line, and they put the what we call long positions, buying positions, on the support lines. Okay? But we have some traders, and of course you can do both, that they're looking for breakthroughs, which means let me just delete the indicator windows here. We went through it, so I don't want to put too many things, sorry, on the screen itself. Let's clean the screen just a bit. And okay, as you can see, okay, here, this is the same 15-minute chart. Now I'm going to add some lines in here, okay? This is a resistance level here, and we had another. You can put another one here, up here, anyhow. And as you can see, so you have support and resistance lines. You see, on this line, if you take this line here, there was a support line right here. Talking about this is August 9th. Anyhow, a support line can become a resistance line from the other side, which means this was a support line for these prices. Look at this. Let's take it down a little bit. Okay, just to show you. It was a support line here, 1, 2, 3, 4, and so on, and then it became a resistance line from the other side. Okay, so these key levels, they can become both of them. Now, when we have a breakthrough of the support or resistance line, just like we had here, look, 1, reverse, went back up, 2, reverse, 3. On the 4th time, we had a breakthrough, and it went all the way down to what became later on a support line, which means we can trade, okay, either on the reverse of the price on the support or resistance line, or wait for a breakthrough, and then, when we have a breakthrough, we can trade the same direction all the way to the next line or the one after. All right? Good. So, two ways to trade. Good. Good traders take into consideration market sentiment while looking for support and resistance levels. You can check the VIX index, okay, the index of fear. We talked about it on past webinars. You can watch it on Facebook or YouTube. And good traders will take into consideration market sentiment. You see if the market has a lot of tension, is more quiet, more stable. Pay attention. A conflict between support and resistance and a trend could result a breakout. Okay. Example: if an asset is on a strong uptrend, or how do we know uptrend? We have 3 higher highs and 3 higher lows. Okay. The market is not going one way. Okay, it can break above many resistance levels. If we take the euro versus the dollar, for example, and put it on a daily chart, let's zoom in a little bit. These are all the lines that we drew here. Let me just take it off, make it easier for you guys. Delete all selected. Let's erase everything. You see this uptrend? This is a daily chart. Each candle represents one day. This is live, okay? We had an uptrend of the euro versus the dollar, which means the euro got stronger versus the dollar. And you see you have higher highs and higher lows. This is an uptrend. Of course, on the other hand, if we have lower highs and lower lows, we're looking at a downtrend. Okay, and always remember, the trend is your friend. Okay, this is a phrase that we use in the market for a long, long time, because we as small fish, all we want to do is just ride with the big sharks. Okay, the big money is doing whatever it is doing. Me with $1 million and $2 million, I cannot move the market. I don't have enough power to move the market, but I can recognize trends. And if I know how to identify the trend, I can join the trend. As I said, the trend is your friend. If we have an uptrend, just like a surfer, think about it. When you surf in the ocean and we have a wave, you want to ride on the wave, okay? Downtrend, we want to trade with the trend. And an uptrend, if you identify an uptrend, we would like to trade, of course, with the trend. So an uptrend can break many, many resistance lines, and a downtrend can, of course, break support lines as well. If an asset is in a strong downtrend, it can break below many support levels, as we said. Okay, here are some assets. I just did some research for you guys, and let me just show you. Here are some assets that are on a strong uptrend. Apple stock, everybody knows Apple stock is trading around $160 a share. Okay, the stock has jumped almost 40% since the start of 2017. Okay, now the question is, what is the main technical upside target right now? Now, for the short-term target is record high 162. Why? Because it's the highest ever. Right now it's around 160, $162 per share for Apple is the highest ever. It was a few days ago. So this is the new target for resistance, okay? But the medium-term target, I would say, is the $1 trillion market value that's supposed to happen when Apple will be at around exactly $189 per share. If you take the number of shares multiply by the share value, you're gonna get the market cap. Okay, so let me show you Apple. Let me show you Apple, and let me show you how much it's worth right now. So this is Apple stock, traded right now at 161. You see, the highest was here, 162, and this is the highest. This is a daily chart. You can see the highest, very strong uptrend. They had some great what we call there's some great during the earnings season, some great reports. This is a great report right here, okay, and a strong uptrend. Now for the short term, of course, 162 is the highest it ever got, so this is the next resistance line. But on the medium term, okay, if they're gonna reach, let me show you this. Let's go to Google Finance and write, let's just go to Google Finance here. Let's look for Apple. I don't want to get you confused too much. I'm going to just do it quick and show you. Right now, the market cap, okay, how do we calculate the market cap? We take the price per share, which is 161.5. Okay, and of course, it's moving because right now the US market is open. It's been open for around 30 minutes already. We take the share price and we multiply it by the number of shares, which is around 5 billion, all right? And then we're going to get how much Apple worth, which is $834 billion. Now, when this number will hit 1 trillion, okay, the price of Apple share will be $189. So in the medium term, okay, we're not talking about a year, the long term, but this is the next target of Apple. You can see the uptrend. Okay, you can see the uptrend. You can see the price of the share. Okay, and it's going up. And you can see that if you multiply this by the number of shares, you get the market cap. Now, the market cap right now is $834 billion. It's a lot. When it's going to get to 1 trillion, we expect the next target, which is $189 per share for Apple. All right, nice, right? Okay. And let's go on. Next thing, assets that are trading close to the record highs need different attention, just like Apple that we saw, all right? That is why traders look at the market value of Apple, as I said. Now, currencies don't reach record highs or lows very often, right? Because it's the relation between the currencies. Therefore, historic support and resistance levels are extremely important. If you trade on currencies, okay, look at the monthly chart or weekly chart and look at during the years what are the big support and resistance levels, because these levels are critical if you want to trade for the longer term. All right, round numbers are also indication for technical key level. Okay, examples: gold at 1,300 US dollar per ounce, okay, or the euro versus the dollar at 1.2. Okay, these are round numbers. Why? Because psychologically, think about it, all the pending orders, all the big money is waiting in these round numbers. You're not going to call your broker, guys, and tell him buy gold at 1,000, maybe you do, but 1,273 and 20 cents. No, you're going to tell him sell gold, just for example, at 1,300. You're not going to buy euros, okay, at the price of 1.18 dollars and 30 pips per 1 euro, but you will sell or buy euros, okay, versus the US dollar on 1.2, right? Round numbers. Think about it. The world is looking at round numbers, psychology. Okay, now let me show you the levels on the MetaTrader. If we look at the euro versus the dollar, let's take a look at gold first. Gold. Right now the price is $1,272 per ounce. Okay, as you can see, we have a strong resistance line here. You see 1, 2, 3 times. This is a daily chart at 1,292. This is 1,300. It didn't reach it yet. Okay, even higher than that here. It hit 1,295. Look how great it is. And every time the price touched almost 1,300, okay, big money, sold gold, and gold went back down. So this resistance line that you see here is almost on $1,300 per gold, per ounce. I'm sorry, for gold. And this is why it's here, guys, just because of the round number. If you look at the euro versus the dollar, just like we did last time, 1.2, which is up here. Okay, this is the next target on technically because of the round number. Okay, pretty easy, right? Good. So these are just a few examples on gold and the euro versus the dollar. Gold is trading between technical levels, as I just showed you, between resistance and support. Pressure from North Korea, by the way, has pushed gold towards 1,300 an ounce. Let me explain why. The thing is, North Korea, I don't know if you read the news, but there's a whole mess between North Korea and the United States. We might look for a war, so, build some strong houses wherever you are in the world. I don't know where the world is going with Trump and the other guy in North Korea. I hope he's not listening to my webinar, because then I'm going to have to find a place to stay. But pressure from North Korea has pushed gold towards 1,300 because gold is a safe haven, right? Gold works with the exactly opposite correlation with the US dollar. When people don't know, I'm saying it every webinar, I'm going to repeat it again. When people don't know what currency to invest on, especially the US dollar, they put the money on gold. So every time the US dollar goes down, gold goes up, and every time gold goes down, the US dollar goes up, and so on and so on. So because of the pressure from North Korea right now, it pushed gold went up towards 1,300. Didn't touch it yet because of the resistance line that I just showed you, and price went back down. But relief from tension have pushed gold back down to around $1,273 an ounce, just like I showed you on the MetaTrader a minute ago. Okay, this is the reason that in the past 2-3 days, because of the relief of the tension, gold went back down and the US dollar got stronger. Now, traders can take advantage of short-term support and resistance levels on a momentum drops. Okay. Silver is another big metal commodity, is also following gold in this safe haven trade, as we said. Good. Gold and silver, the opposite from the US dollar. Pressure on the United States, dollar goes down, gold and silver goes up, and the opposite. When we have a relief, the US dollar is getting stronger, and gold and silver are getting weaker. Technical levels exist for any assets at any time frame. Now, traders are recommended to monitor at least 5 assets each day. Okay, choose yourself 5 assets each day, monitor them. I want you to remember the support and resistance lines. You can, of course, use these technical technical indicators, such as the Bollinger Bands, RSI, MACD, Stochastic, and so on, to confirm. Remember, it's not coming instead, but to confirm what we already see on the support and resistance lines. And traders are also recommended to look for support and resistance levels on few time frames, which means you can put some lines on the daily chart, go down to 4 hours chart, to 1 hour chart, okay, and put it on a few time frames so you understand the bigs, I would say the major support and resistance levels, okay, and the mini support and resistance levels. If you're a day trader and you open and close position every 10 or 15 minutes, okay, I would go from the daily to 1 hour to 15 minutes or to 5 minutes, okay, and put some levels to understand the resistance and support levels. Okay, you can put a few levels, okay. These are just key levels. You do a setup of the chart before you trade, and of course use it on fundamental events as well. And of course, good luck, guys. Questions, guys. Any questions? Anything you didn't understand you would like me to clarify? This is the time. Okay, by the way, you can email me, of course, during the week for any other questions. Okay, I'll try to answer your questions in between when I have time. And I'm gonna be here next Wednesday, just like every week, talking about the fundamental events or any other events that are taking place in the same week. As I said, you guys on Facebook, next time, just go to join our webinar. Save me a seat. Put in your first name, last name. It's for free. Okay, you can fully listen to the webinar. This webinar is gonna be on our homepage at Facebook, on our homepage at itrader.com on Facebook and on YouTube. So it's going to stay available for you. If you joined us in the middle of the webinar and you want to listen to everything from the beginning, you're more than welcome to go on Facebook and look for itrader.com, click like, and you can listen and hear this webinar. All right. Thank you very much for participating. Have a great one and good luck with your trades. Thank you. Bye-bye.